Ever felt that pit in your stomach when you realize a bill slipped through the cracks? Maybe it was a forgotten subscription or perhaps a loan payment you simply couldn't manage this month. But what if that loan was from Lenme, a peer-to-peer lending platform? And what if, just what if, that missed payment could send your credit score spiraling? It's a question that keeps many up at night, especially in today's gig economy, where financial stability can feel like walking a tightrope. We've all heard the horror stories. Credit scores, those mysterious three-digit numbers, dictating everything from our ability to rent an apartment to securing a decent interest rate on a car loan. They're the gatekeepers of our financial lives. And missing a payment? Well, that sounds like a surefire way to get those gates slammed in our faces. But let's break it down. Before we dive into the specifics of Lenme, let's understand the broader picture of credit scores and missed payments. Think of your credit score as a financial report card. It reflects your creditworthiness, essentially how reliably you repay your debts. Credit bureaus like Experian, Equifax, and TransUnion collect data from your creditors, lenders, and public records to generate this score. Now, a missed payment in the eyes of these bureaus is like a big red flag. It screams, this person might be a risky borrower. And why? Because lenders rely on your payment history to predict your future behavior. A history of timely payments signals responsibility, while missed payments suggest the opposite. How severely a missed payment impacts your score depends on a few factors. First, the severity of the delinquency. Are we talking about a few days late or several months? The longer the delinquency, the greater the impact. Second, the type of credit account. A missed mortgage payment, for instance, will likely have a more significant effect than a missed credit card payment. Third, your overall credit history. If you have a long, established history of on-time payments, a single missed payment might not cause as much damage as if you have a short or troubled credit history. Now, let's bring Lenme into the picture. Lenme, unlike traditional banks, operates on a peer-to-peer lending model. This means you're borrowing from individuals, not institutions. While this can offer flexibility and potentially lower interest rates, it also means that the reporting of missed payments might differ. Lenme, like many lending platforms, will likely report delinquent payments to credit bureaus. Their terms of service, which you should always read carefully before borrowing, usually outline their reporting policies. Generally, if your payment is 30 days late, it's considered delinquent and may be reported. The further you fall behind, the more severe the consequences become. The first step Lenme typically takes is sending reminders and notifications. If you miss your due date, you'll likely receive emails or in-app messages urging you to make the payment. If you ignore these reminders, you might receive phone calls or even letters. After 30 days of delinquency, Lenme may report the missed payment to the credit bureaus. This will show up on your credit report as a late payment, negatively impacting your score. The exact drop in your score will vary, but it can be substantial, especially if you have a high credit score. If you continue to miss payments, the situation can escalate. Lenme may charge late fees, which add to your overall debt. They might also initiate collection proceedings, meaning your debt could be sold to a collection agency. This can severely damage your credit score and make it difficult to obtain future loans. Furthermore, if Lenme reports the missed payment, it doesn't just affect your credit score. It also stays on your credit report for up to 7 years. This means that for 7 years, potential lenders will see this negative mark, which can impact your ability to secure loans, rent apartments, or even get certain jobs. Now, let's talk about the psychological impact. A damaged credit score can lead to significant stress and anxiety. It can limit your financial options and make you feel trapped. The fear of being denied credit can lead to a cycle of financial insecurity. So, what can you do to avoid the situation? Prevention is key. First and foremost, only borrow what you can realistically afford. Create a budget and track your expenses. Ensure you have a clear understanding of your income and outgoings. Secondly, set up automatic payments. This can help you avoid missing due dates due to forgetfulness. Most lending platforms, including Lenme, offer this feature. Thirdly, communicate with Lenme if you're facing financial difficulties. Don't wait until you're 30 days late. Reach out to them and explain your situation. They might be willing to work with you on a payment plan or offer temporary relief. Fourthly, build an emergency fund. Having a financial cushion can help you weather unexpected expenses and avoid relying on credit. Fifthly, monitor your credit report regularly. You can access free credit reports from annualcreditreport.com. Review your reports for any errors or inaccuracies and dispute them immediately. Now, what if you've already missed a payment? Don't panic. The first step is to make the payment as soon as possible. Even if it's late, paying it will stop the delinquency from worsening. Next, contact Lenme and explain the situation. See if they're willing to remove the late payment from your credit report. Some lenders are willing to make adjustments if you have a good track record and explain the circumstances. Finally, focus on rebuilding your credit. This means making all future payments on time, reducing your credit utilization, and avoiding opening new credit accounts unnecessarily. Remember, your credit score is not set in stone. It can improve over time with responsible financial behavior. Every on-time payment you make helps rebuild your credit history. Now, to add a bit of context specific to Lenme, their peer-to-peer nature often means the lenders are individuals, not large institutions. This can lead to a slightly different approach to collections and reporting. While they will likely report to credit bureaus, some lenders might be more willing to work with you on a payment plan than a traditional bank. However, this is not guaranteed. Each lender on Lenme is an individual and they have their own policies. It's crucial to communicate with them directly and understand their expectations. The key takeaway here is to be proactive. Don't wait until you're facing a financial crisis to address the issue. Open communication, responsible budgeting, and timely payments are your best defenses against a damaged credit score. The fear of a damaged credit score is real, and it's understandable. But with knowledge and proactive steps, you can protect your financial health. Remember, your credit score is a reflection of your financial responsibility. By understanding how it works and taking steps to maintain it, you can navigate the financial landscape with confidence. With that said, thanks for watching, and until next time.